Let's welcome our market master for the day. Suhas, the head of research at JM Financial, joins us from the sidelines of the company's ongoing India conference. Suhas, good morning. Thank you very much for joining us indeed.
Good morning.
You've been speaking with a lot of investors out there, both domestic and global. What is the sense you're getting? At 8,400, people would worry about valuations?
Of course, there's a lingering worry about valuations at all levels. Even when the market goes to 5,000, people worry about valuations. When it goes to 8,000, people worry more about valuations. But I think the sense that we have is, since the elections results were announced, I think people have marginally increased their overweight to India. But actually, if you look at flows into FI flows into India, as all of us know, majority of the flows have been still towards debt than to equity, right? So to that extent, we could argue that people have increased their weight to India, but we still haven't seen the big flows. So I think right now, while there's a worry about valuations, what we're recommending to investors is stay invested, keep the faith. I think I don't think some of the sectors, some of the highly deep cyclical sectors, have really seen the kind of movement that you would associate with a recovery, right? So I think we'll continue to recommend to stay invested to all investors. And I think in fact this is not just the conference. If you look at over the next 2 weeks. So at the conference we have close to 400 investors, both international and from India. And over the next 2 to 3 weeks, we are doing multiple, visits for various investors who could not make it for our conference. So I think the interest in India is really high, and I think it'll continue to keep, I think whatever the steps the government takes in the, over the next few months and years, will continue to keep that interest going alive in our view.
All right, Suhas, hi, morning. I was going through your detailed report of Prime Minister Modi's Make in India program. What are the companies in your mind that stand to benefit from this recovery in the manufacturing sector?
No, I think as a top-down, what we've tried to do in the report is to put the manufacturing sector in India, or analyzing the manufacturing sector in India through a proper framework. Right. So we've looked at 11 or 12 large sectors. We put them in a framework, analyzing across 6 or 7 factors, analyzing India's competitive advantage across in these multiple sectors, and we've classified these different sectors into leaders, aspirants, and laggards. And in our view, I think there are 3 broader sectors that we really like, and which we think are at a or staring at a multi-year growth. We first of all is the auto and auto ang sector. I think you could differentiate between the various sub-segments within that, but I think whether it's forgings, bearings. So if you analyze the results of the last 1 year of most of these companies, they've all done well, and I think they'll continue to do well. In fact, the auto ang sector is a bigger sector than the auto OEM market right now. So auto angs is one of the sectors that we really like. Second sector where we see India at an inflection point. Again, it comes, I think the textile story in India, plays out every 10 years, if I look back over the past many years. But I think even this time, the apparel part of the textiles business, I think should do very well. And lastly, agrochemicals. So I think these are the 3 broader sub-segments. We haven't discussed any companies in the report per se, but it's, it's easy to, pick companies from these sectors, because these are not large, some of them are not large companies by themselves, but very interesting companies at a cusp of strong growth.
India got a major advantage last year, Suhas, because of that huge 15-20% depreciation. That could be running out. We have been at par with a dollar which has been sharply rising over the last 6 months. So it's an appreciating currency. Will that cream off some immediate gains from guys like apparels who are anyway on way within margins?
That's a good point. I think What we also noticed is that what we really analyzed in the report is that India has a lot of labor coming up in the next few years. Everyone knows the 1 million per month labor addition to labor force which takes place, right? And secondly, if you look at on a dollar adjusted basis also, India is very cost competitive on a dollar per hour basis versus China at this point in time. I take your point that some of these do operate on wafer thin margins, but what we've noticed is this time around there are at least a couple of companies which have changed their organization to capture the opportunities. The point is India's share of apparels in the global trade is very, very low at this point in time. It's probably 3 to 4%. Right, so there is an opportunity, and I think different companies will capture that opportunity and the pace at which will be determined by how fast they change their organization.
Can you name names?
A couple of companies which are doing that. So Arvind Mills is one of the names that we've liked. They were also there at our conference, and I think they have a strong plan to move the apparel part from 10% of sales to 30% of sales over the next 3 years. Now, the point is whether not if it happens within 2 or 3 years, but it's definitely that's the trend that we're noticing in the company. So I think there are certain companies which have taken that organizational leap, so to speak, to move up the apparel value chain.
It's interesting that you say you like the agrochemical space because this is one sector that many investors have spoken to us about in the last couple of weeks. What are the pockets that you like there? Is it fertilizers, pesticides, and if you can name some companies that you're bullish on?
No, I think the company that we like there is Rallis. I think, okay, if I look at the overall chemicals, value chain, I think fertilizers is not the segment that we are talking of. We are talking of largely the crop protection, seeds, and also the, manufacturing part of the story, which is the CSM business, custom synthesis, business. Where I agree, PI Industries has is a leg up over Rallis, but that's a sub-segment we really like, the non-fertilizer or the non-subsidy linked sector, right? That's really the sub-segment that we like.
Okay. We've got a query from our money control borders. They can ask you questions. There is a Salim Narayan who has written to us from Kottayam. He wants to know the outlook for Union Bank. And I could expand it to say what PSU banks do you like, if at all?
I think if I look at our top-down strategy for India, I think there are 3 buckets that we've liked, and we've liked it for multiple years. First is private banks and private financiers. There are the exporters and the cement companies as well. But that clearly shows, where our preferences lie. So we're clearly backing the private financiers and NBFCs, private banks and the other financiers. So I think, PSUs are not, we've been significantly overweight the private banks.
Okay. To come back to your auto ancillary argument, yesterday we had, you could squabble with the Motherson Sumi's top line numbers a bit. Do you find any of these stocks overvalued? Bharat Forge, of course, the numbers were excellent. Motherson Sumi, any of the big auto anch guys?
No, I think as we started by saying, there is a lingering worry on valuations across companies, across various companies in the market. We can't pick and choose one company at this point in time. So the whole idea of the report was also to identify long-term structural themes. So we are not looking at 3-6 month valuation. Now, in terms of the companies that you specifically mentioned, we back these names for more than 15 to 24 months, and so at this point in time, we could argue about valuations, but I'm not getting into that debate because it can go on and on. Whether it's 23 is better or 26 is better. But I think there is a clear sales growth that we are seeing from their manufacturing business.
Okay. There's one segment that has not got as much interest as perhaps it should, which is gems and jewelry. And I noticed that it's present in your leaders, bracket in your report. Are there any stocks in this segment that you are bullish on and would recommend?
Not as a manufacturing thesis really, and stocks. I think if you look at history of Titan, I think Titan apparently started as a manufacturing for exports company way back in early 90s. Okay, subsequently reinvented as a domestic brands company. So, but clearly there are no companies. We like Titan within the space, but we're not. That's not something that we are backing on the manufacturing India thesis. It's a different story about specialty retail and all that. It's a different thesis. We probably when we write a report on specialty retail, we'll have Titan out there, but not on a manufacturing report.
Okay, you've mentioned rubber and plastics. Don't know much about companies, and this looks like a better category for an investor to get in because you're calling them the aspirants. What stocks would you refer to in this sector?
So I think, there interestingly, I think if you look at the whole petchem related basket, there's no significant competitive advantage that India has within that segment. Manufacturing is done here for a little bit of arbitrage and a little bit of margins, etc. But there's no significant competitive advantage. But possibly one segment where we really like is the tires segment. Okay. So Apollo and Seat are two names that we really liked again within the whole. It fits in two baskets. It fits in somewhere within the whole auto and basket. Also, it also fits in with the the rubber basket. India has ample production of rubber, so you have the raw material advantage. And you have good, strong companies as well. So I think that's the tires sub-segment is something that we really like.
Okay. So just to carry forward the aspirants group that Lata was talking about, in the engineering goods segment, we have seen some of these bearings companies like Timken, etc., perform quite well this quarter. What are the companies that you would be looking at or bullish on in that space?
So I think the reason we've classified engineering goods separately away from the different from the auto angs is these are we would like to make a differentiation between the non-auto engineering goods. Now forgings and bearings, as we mentioned there, also feature within the auto sub-segments or the auto ang sub-segments. So as you rightly mentioned, so Timken, if you look at non-auto engineering goods, clearly Timken is one of the names that again we've liked. They had a great quarter. So I think as Lata also mentioned earlier on, last 12 months to 16 months, we've seen tremendous growth on the bearings, on the exports segment, whether it's forgings, bearings. So Timken actually operated at 85% capacity utilization last quarter. I'm not sure how many manufacturing companies operated at 85% capacity utilization last quarter. So you've seen them moving two lines, into exports over the last quarter. So I think Timken is the non-auto bearings company that we really like.
All right. That's a bunch of stocks and themes that have spoken to us about Suhas Hari.
Yeah, that's right.
Pleasure speaking with you. Thank you very much for joining us
Pleasure speaking to you.
with your thoughts.